Tonight. For more on the volatile
Thank you.
markets, let's bring in Rob Sechan, Managing Director at UBS, and Oliver Pursche. He is Chief Market Strategist at 1879 Advisors. It's good to have you both with us. Oliver, I start with you. Bob said it, our heads were spinning and then some this week. What's next?
More volatility, but today was actually a very interesting day because it didn't make any sense, and that means that it was kind of a liquidation day as opposed to anything that had to do with fundamentals. Look, there's absolutely no reason why Carnival or United Airlines would rally today when telecoms and utilities drop sharply. That makes no sense. So to me, this seemed like it was a day where market participants simply flushed out everything or nearly everything, and we're looking to just zero out risk as much as possible coming into the weekend.
Rob, when does this flush stop?
You know, Scott, I think it stops when we see light at the end of the tunnel from any number of things. But from an action standpoint, for us and our clients, we don't want to do anything in what is the steepest decline of all time. It's really normal to feel the way we're feeling at a time like this, unless absolutely necessary. Selling into what Oliver mentioned in the most dislocated markets that I've ever seen since I started is just absolutely crazy. I think you have to have a collector's or an investor's mindset. And, you know, we learned this in business school, that the value of an enterprise, and this is the way Warren Buffett does it, 70% is in the terminal value when you do a discounted cash flow. In the 4 to 5 year period, you get 30% of that valuation. So you just need a strong enough balance sheet or government help to help you make it through that period. So if you're thinking about buying, and we've certainly been doing some collecting along the way, you want to go to those companies that have the strongest balance sheets to make it through.
Oliver, is there a specific sign that you're looking for that will tell you maybe we can sustain some sort of gains in the market, a snapback that could last more than a day?
Well, I think it's difficult to say. This is unprecedented. But what we know from history is that typically stocks and markets start to rebound well before a crisis is over or even hits its peak. So you would expect stocks to, again, rise sharply and consistently well before the coronavirus scare and epidemic ends. Secondly, we also know that from the lows in a crisis, on average, it's taken roughly 3.5 years to recoup all of the losses. We saw that in the 08 and 09 crisis. We saw it with the market crash after 9/11 and throughout history. So, you know, I think as a long-term investor, yes, this is painful, but you don't panic. You don't sell into it trying to somehow think that you're going to time it and get back in at cheaper prices. You do take the opportunity to rebalance your portfolio, to go with balance sheet strength, go with earnings visibility, go with higher quality companies, because right now you're probably able to sell some things at a loss and get a tax benefit as well.
Yeah.
So those are the moves that we are making for our clients.
Rob, the reality is recessions typically cause around a 50% decline in the stock market. We're not there yet, even with as much pain as we felt.
Yes, but I think the magnitude of the decline says it all. And you know, just to build on what Oliver said, you know, the medicine needs to start to work. And I think, you know, to get the medicine to work, the patient has to take the medicine, Scott. And so what you saw from New York and California today, I view as positives. I don't view those are positives to move through the first phase of this, which is battling the virus, aggressive social distancing, mobilization of the workforce. And, oh, by the way, did anybody see how well the stay-at-home economy stocks are doing? So people are looking for value in this. You know you're going to have a supportive Fed and Treasury. You know you're going to get a very strong fiscal package that looks like shock and awe. You've already seen China come back to some degree. And many people are saying as much as 95%. Auto traffic normalization, coal utilization. I mean, there's a lot of green shoots here, and I think we have to pay attention to those green shoots. You're bringing a lot of good points, and I don't know if you've noticed this, but the tone of the news flow has changed. people's reaction to the news flow has not yet, and it will.